Welcome to another edition of Cattle Chatter. I'm Susan Littlefield. As Brad Kooima joins us, he is with Kooima Kooima Varilek out of Sioux Center, Iowa. A lot of interesting factors globally that are going to affect the way we're seeing this cattle trade. But let's take the pin on the map and bring it right into our backyards, where there's a lot of concern about cattle just not being ready and how it's going to meet all that demand. Grilling season set to get underway. As we kick this show off, let's kind of start there, Brad, because the momentum has been there. We know consumers want the beef, but as you're finding out and looking, it's pretty tight supplies right now.
Without a doubt, Susan. And I think that's a great place to start. And thank you, of course, for having me on. I enjoy this a lot. We've talked about it every week, I think. And I'm sure this show gets picked up in Kansas and Texas and stuff and other places, and they probably roll their eyes every time I say it, but too bad. The beginning and the end of all markets start in Iowa. I think that I really believe that. Okay. Often it's the bad side of it, because the farmer feeder is backed up and we're fighting the market. Our break evens are too high. We're losing money, et cetera, and we're creating a bear market, a market that has no leverage for the producer. But the other side of that deal, the other side of that coin, is where we've been for a while, and we still are there, and maybe even more glaringly so than maybe any time here in the last several months. As we transition out of the north, out of the yearlings into calves, the yearlings are largely cleaned up, and these calves are, maybe they're a little further ahead than normal because we've had a very mild winter, but it's hard to get a calf fat in April. Based on the north, one would think that the average weights would drop dramatically here in the next short term. The packer is running around here complaining that the cattle aren't going to grade. Very typical. Again, they aren't. They're calves that need to get bigger, and they need to have more groceries. They need to be on feed longer, and so it starts with that. I still would contend that we're pulled ahead here in the north, maybe 30 days or so. And that's in stark contrast to so many times when we're backlogged that far, and if you think about 30 days ahead or 30 days behind, and someone might say, is that a big deal? Divide 2 months into 12 months and see what that does to your percentage. I mean, that's a huge deal, 12-15% change in supply of cattle. So, and it's all about leverage. And people ask me, how come the north is higher than the south? Well, leverage, because we trade cattle, because we negotiate for cattle. And I would say our cattle are better, so they grade better, and they should be bringing more. So it starts there. And when you got a discounted structure in the futures market compared to cash, it has a tendency to drag the futures along with it a little bit, Susan.
So as you look at that, obviously some light sales have been happening in parts of Kansas this week. So the pressure's got to be on for them. If the northern tiers of Iowa, Nebraska are saying, hey, we need some cattle coming out of Kansas, or even farther south as Oklahoma and Texas.
Yeah, and I don't want to overread or overthink this, but I think the way I would interpret that, you're referring to a few cattle that traded in Kansas yesterday afternoon to a regional at 213, and they moved north. Okay. I also know that there's a significant number of cattle that have been trading out of Kansas and going into plants in Nebraska. When I hear that kind of news, that tells me that, well, Brad, clearly that's another proof, if you would, that the supply of cattle in the north is very, very tight. Why would they spend that extra money for freight and maybe on cattle that may or may not be the same quality? Well, it's because they can't get enough of them here. So basically last week, the south was 210-ish and the north was 215 for a top, not on everything, but that was the top. So they're trying to narrow that. The south is trying to, narrow that spread a little bit between them and us. But the trade hasn't happened here in the north yet, but it's going to be higher, I think. Asking prices are clear up at 220. That might outkick the coverage a little bit, but I think a couple higher, 217 to 18 wouldn't surprise me at all, Susan.
Well, that was what I was going to ask you. How high can this go? Because I know they said cattlemen are going to hold out to the 11th hour this week.
Yeah, I wish I knew, boy. There's a when you get as old as me, you accumulate these little sayings, right? It's like, one is, it doesn't matter when you get on the train if you're going the right direction, and I I think I sarcastically say, it's hard enough for me to try to figure out if they're going up or down, let alone exactly what price they're going to, because there is no way to know. Now, I may have blurted out that I thought we were going to go to 220 cash a couple of times. Now that we're going to almost be there, I suppose there'll be some other analyst that thinks it has to go higher than that. I don't know. To me, the laser point of the news is going to happen sometime here in the next few weeks. Okay. I think the supply is going to be as tight as ever when we get to the first part of May, and it's going to be timed exactly with when the demand gets to the best of the year. I'd watch that first couple of weeks of May. Let's see where we get to. Markets always go too low, and markets always go too high. I don't think they're too high, but I mean, they overdo whatever they do. So there's always that.
So let's expand that map and look more global. We know the tensions do continue with all the tariff chatter, especially with China. And then I saw reports earlier this week that one of the top American beef restaurants in Beijing said, hey, we got 2 weeks left of American beef in the freezer and we're switching to Australian beef, which is kind of funny to have Aussie beef in an American barbecue restaurant.
Yeah, funny or something. I don't know what the right word is there. You bring up a point that the market doesn't seem like it wants to talk about here, Susan, but I'm in your camp here a little bit of being sensitive to that sort of thing. I don't want to be that guy that cries wolf here, but it's hard for me to imagine that putting a face on what happened this week so far, at least with the China and U.S. Tariff talk, where China seems to be strutting around and calling themselves the winner of the deal. I worry that we have not heard the last on this whole matter. China is a very important trade partner in a number of commodities, but certainly in cattle. And little stories like that, still tell me that there's some issues, and they're going to try to they'll try to talk tough. At the end of the day, do they need us? Of course they do. But the problem there is that the cattle market, like no other, it's like SeaWorld. We are in the first 2 rows. If you're sitting in the cattle thing, you've got a chance to get wet. You know what I mean? The market has a tendency to react negatively to those kinds of news. So I like I've said 100 times here, I guess my mantra is buy puts, but stay bullish. Be careful. These are levels that there's certainly risk here when you got break evens up in this neighborhood. But do I think the market's all right? I sure do. But I do also can recognize the fact that I could anticipate COVID. I couldn't anticipate September 11 and all these other things, fires. So, there's a reason I still think to use some common sense and some risk management.
So looking at, you talked about the funds when you and I were talking before we went on the air, and you talked about how the funds are really staying in place this week while the open interest saw a bit of a drop.
I thought that was quite interesting. Maybe no one else does, but we on that sell-off, we had dropped open interest 85, 90,000. I mean, I think we almost have to talk about it. Everyone was talking ad nauseum about, oh boy, we got 400 and some thousand open interest. Wow, what are we going to do? And then the market just, again, I'd way rather be on the fund side than trying to outsmart and guessing when they're going to have to get out, because it's just, they will do what works until it doesn't work. Okay. So, when we broke that, we thought, oh boy, I hope we don't get rid of the funds. We need the funds. You need that long speculator that comes from that fund. And I was surprised that the commitment of traders are a few days old, those reports when you get them, but it looks like we only lost maybe 15, 18,000 on the funds. The rest of that liquidation in the open interest was probably people more like me or whomever, the public or that sort of trade, the smaller traders. So I actually take that as kind of an encouraging sign. And then if you look at the last 4 or 5 days here, when the market's been rallying real nice, we've got a steady pounding, increasing open interest. So it looks like they're just kind of got some dry powder and they're coming right back into the long side of the market.
So what's the best way for folks to get a hold of you as we wrap up another episode?
Thanks. Phone is 712-722-0023, or you can find all about us at kkvtrading.com.
Well, thanks so much, Brad Kooima, joining us this week for another edition of Cattle Chatter.
The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.